speaker. It's probably something I should put on screen. Okay. So this webinar is about tips and examples of how to supercharge your financial planning and budgeting. We've got a lot of experience in this area, so let me introduce myself and the company. And something has stuck. Just give me a second. Okay, so this is me, the guy who's talking. My name's Tim Rosser. I'm the Client Solutions Director here at ABM Systems. In addition to some formal qualifications, I'm an experienced consultant and I've done a lot of work in this space, starting way back when in Coopers & Lybrand consultants in the 90s, but most recently I joined IBM in 2012 and spent all of that first year consulting in budgeting and forecasting and implementing one of our biggest adaptive projects there. I've got my contact details there. I'll just put a bit of housekeeping. A lot of people online, so please use the chat to ask questions or email me for a later response. I think we've all been muted out so I don't get too much crosstalk back at this end. That's me. ABM Systems, I've got a couple of slides on us. We were established in 1997 by Greg Clark, who was ex-PwC. Our focus is on improving enterprise performance, and we spend a lot of time helping CFOs improve the enterprise performance, and one of the ways we do that is through better budgeting, forecasting, planning, and reporting on that. You see on screen there we have several global leading solutions as our technology partners. The one that we'll be focusing on today is Adaptive Insights. And that's a really good tool for building budgets, reporting on budgets. One of the other tools we work with very closely is ClickView, which is a dashboarding, reporting and analytics solution. And I won't be talking any more about that today, but if you've got an interest in that area, please get in touch with me. ABM do the complete project, so we're really into problem solving and skills transfer. When we deliver projects, we train up client staff so that they can maintain the solution. We'll do the whole thing from the software sale through the implementation to post-sale support. I've got the obligatory slide with some of our client logos up there. Some of these are budgeting and forecasting, some of them are analytics and business intelligence, some of them are some of our costing and strategic disciplines. Hopefully there's something there you can relate to. Okay, so getting into it, I wanted to ask the question for the finance people out there, where are you now? And I've got a slide here that puts one view of how we see the evolution of finance organisations. So finance starts with key responsibilities about recording transactions, maintaining transactions, being able to generate the accounts, and compliance. And that's sort of the basic function of most accounting departments. But increasingly, accounting departments and finance departments are being asked to do a whole lot more. They're being asked to get away from this 1-2 area where they're really focused on the past and focus more on the future, on strategic input to the business, on planning and analysis of those numbers rather than just recording them. And there's quite a lot of words on this slide, but we like to think we're helping finance departments get from managing transactions and accounting to managing and improving the value of the business, being part of enterprise-wide collaboration, giving superior decision support to all areas of the business, helping business development, enterprise risk management, and being part of the leadership and performance management of the business. So I want to think about how we get there. And I've got a slide here I want to spend a bit of time on, and this is really our key 5 things that is the title of this webinar. I think there are 5 key best practices that help an organisation get from managing transactions to being strategic. One of them is automating the KPIs of a business. So if you're recording in various systems lots of transactional data, we want to present that back to business managers as KPIs as quickly as possible after the event. So they should have real-time interactive dashboards on their performance. All budgeting and forecasting should be driver-based. So it's easy to put a number in a spreadsheet to say, here's what our sales are going to be, but is that based on anything? And does it drive anything? So we think driver-based models help you budget and forecast efficiently, and they give some meaning to the numbers. If your sales forecast is based on, certain hours of professional service, certain numbers of products sold, then that revenue is also going to have attached to it costs and other activities that may lead to having more people in the business. So that single driver, if you change it in your forecast or your plan, will drive changes across your budget and forecast. We think it's really important to reforecast often. So many organisations only do a budget annually, or maybe they update it semi-annually, but there's new data coming in every day, and we tend to think that the right frequency for redoing your forecast is monthly. So at the end of month, after books close, you'll be bringing in the current month's actuals and updating your annual forecast, not only based on one more month of actuals and one less month of forecast, so it gets more accurate that way, but also using that new set of actual data to reforecast the remainder of the current financial year and quite possibly future years as well. So, for example, if expenses are higher in the month, then business needs to be alerted of that, and they will have a view of, oh, that's just because some expenses came in early and it's nothing to worry about, or, oh, that's the new normal and we need to do something about it. So getting those rolling forecasts happening is a key discipline for better financial management. We really think collaboration is important, and if finance does all the work and the business units are not involved, then we don't have collaboration, and finance is just dictating budgets that people don't agree with, people that don't take ownership of their budgets. It's really important to get the business managers involved in building the budget and reviewing variances to that as the year progresses. Collaboration also means being able to consolidate all the budgets and forecasts that are submitted by different parts of the business into a holistic view of the organisation, so that that can be fed up to management and back down to the business. The last key practice that we strongly believe in is self-service. Finance departments can waste a lot of time responding to requests for reports when the users themselves know exactly what they want, and with the right tools they can get it themselves. So rather than them asking for a report that shows X and then finding out they didn't really need X, they need X and a bit or a bit of Y, and going back and forwards and backwards and forwards, by which time the numbers are probably out of date anyway. Get the business to log in to a system, perhaps not the ERP or the GL system, but log into a system that shows them the data they need, allow them to write the reports and get the data that they need quickly and efficiently. All right, so if they're the best practices, how do we do this? Well, most organisations are using Excel, and I love Excel. I'm a bit of a guru with Excel. I can do pivot tables and I can write VBA and all sorts of things, but in its heart, Excel is a personal productivity tool, and it's really a poor choice in a multi-user environment. So if the only one doing budgeting and forecasting is the CFO, then you're probably going to need one spreadsheet, and you don't have collaboration and you don't have all those key things that are on the previous slide. But if you want to roll out a system to the whole business and get buy-in from different business managers, Excel is not a good choice for that. And the diagram on the right here represents what happens in a lot of organisations we talk to, where there are spreadsheets going everywhere via email. Nobody knows which is the current version. Links break. They're not always fit for purpose. Different managers will add rows and then things don't align. There's very little audit trail and version control. You also get situations where a department spreadsheet is opened by one person who's gone to lunch, and then their manager needs to submit it or adjust something, and it's locked for editing, and it really doesn't work that well. And most organisations that are using Excel for budgeting and forecasting do it less frequently. It's such a painful process, and it takes more than a month to do, then you can't really redo that every month. Okay, so if Excel's not the answer, what is? In the market, there are a lot of legacy enterprise solutions here. There's some names on the screen there that you might recognise. We think these aren't a good solution either. They tend to be very expensive and complex, slow to deploy, hard to use, IT intensive. And in most cases, they're aging technology. Well, you guys, I'm going to tell you the answer. The answer we believe strongly in is adaptive planning, who's the leader in cloud business analytics. And they're the leader for a number of reasons. And one of them is that it's so easy to use. But we also believe the cloud itself gives significant advantage to adaptive planning and to the users of adaptive planning. So I've got some stats on adaptive planning themselves there. But cloud-based planning itself is significantly faster to implement, faster to use, significantly less expensive. It's scalable and powerful, and it helps reduce finance's dependence on IT. In terms of cost, there are many costs of IT systems that are eliminated by a cloud-based deployment. So the iceberg on the left there shows you that the software licenses are really the tip of the iceberg when you own your own system. There's a significant cost of hardware, there's a significant cost of IT personnel, and there are maintenance costs there. The cloud-based solution, once it's implemented and customized for you, the only cost you've got left is a subscription fee, which covers the maintenance, the hardware, scalability, backup, security, all those other bits that might cost your own internal IT department. So back to adaptive planning, they have very strong analysis and validation, rated #1 in customer experience, highly rated by Gartner and many other independent organisations. And very well loved by their customers, very low churn rate. So adaptive planning is sold as a subscription, and very few people, although they have to pay their subscription every year or whenever their current contract expires, there's a very low churn rate there. I just got one last slide on the product, and then I'll start to show you some of it. So adaptive planning, or adaptive insights, the company is now called, has a number of different products. What we tend to focus on is adaptive planning, which is the budgeting, forecasting, and planning piece. On top of that, they do adaptive discovery, which is dashboards, graphs, and drillable charts for analysing and reviewing the planning, budgeting, and forecasting data. Adaptive consolidation is sold as a separate product, and that's for managing financial consolidation at end of reporting periods. So if you've got multiple different financial entities, you need to apply journals and exchange rate conversions, do intercompany eliminations, partial ownership consolidations and roll-ups, then adaptive consolidation will get you quickly from your actuals in multiple systems to a consolidated financial report. Reporting, much of that's bundled into the planning, but there are some separate advanced reporting pieces sold separately. And adaptive integration allows adaptive planning to integrate with your other systems, particularly ERP or GL system. But we often take feeds from sales systems, personnel systems, and other systems that will inform the budgeting, forecasting, and planning process. Okay, so I hope that makes sense. Again, thinking about the key things that make finance more effective, I'm going to show you a bit of software. So I've logged into adaptive planning. I'm now in a web browser, and the screen I've decided to show you first is the workflow status page. There's a few reasons for this. One is that this shows you the structure of the model that I'm demonstrating. We have a number of different companies in here. We've got company A up the top, company C down the bottom. They've got divisions and units and cost centers underneath that in the hierarchy. Within adaptive planning, we can have managers that apply at any node here. So an Australian manager would be able to see all of the different units underneath there, and a Canadian manager just his 2 cost centers. Everything rolls up automatically and instantly. There's no linking spreadsheets together in adaptive. It automatically rolls up the hierarchy. And as people go through a budget or a forecast cycle, this is where senior manager can see who's done their forecast or budget, who's yet to do it, and what the status is. So you can see here, most of them are in progress, which means they're open for further updates. Services West has submitted theirs for review. Canada's a bit ahead. They've submitted theirs, been approved, and now they're all approved and locked. This one over here has been submitted and then rejected, so it's back in progress status. So this is one page at a glance of who's done what in the current budget or forecast cycle. Each of these submits, accepts and rejects can come with notes. You can see the notes here on the rejection is cut expenses by 10%. So that's one element of the structure. Across all of this, we have different accounts in the model, primarily the general ledger, the chart of accounts. The whole thing is duplicated in different versions. So we can see here that our default version that we're looking at now is a working forecast, or a work in progress forecast. But there are other versions. So we've got a board approved targets version. We can report actuals against that, or the current forecast against that. We've got a draft budget. These ones are locked down. We've got a whole folder here where we can create scenarios for budgets and forecasts. You know, what if the world economy tanks? What if our new product takes off and we do phenomenally better than expected? So you can, if the budgets and forecasts are written in a good driver-based way, it's very easy to tweak or change some of those drivers and look at the consequences that cascade throughout the model, because the logic is written to do that. Okay, so that's just a view of where you might be in a forecast cycle. What are the people at the coalface doing? Well, adaptive planning is designed to be simple and familiar for the users that have to enter data. And there are 3 types of sheets in adaptive planning where people will enter data. The simplest of those is a standard sheet, which is what I'm showing on screen here. And the standard sheet looks very much like Excel. We've got time periods across the top and accounts, which could be GL accounts or other driver accounts down the side. And entering data here is very much like you would enter it in Excel. If I were to give myself a forecast for office supplies, because there's not already, I can look at the history, and my history is in green, been loaded from the general ledger, and I can see in recent months office supplies for this unit in the South North here. This year has been about 2,500. So recommending the output, maybe 2,500 good forecast in November, and then I can copy that forward to the end of my plan. I'm expecting a bit of inflation. I might want to do something a bit more advanced. I might want to copy forward advanced. I might say I want to increment this amount by a value of $50 every month, and then I can see that now my forecast is incremented, and it's that simple. Alternatively, there are some very sophisticated breakback functions where I can enter a number for the whole year, and that's very handy for budget. We've got an annual budget for one item, and then break that back. If I said instead of 32,000, which my manager's told me is too high, I've only got 30,000 for office supplies. I enter that in there, and the model says, okay, you've entered a total, but I need to break that back into different months. Shall I break it back proportionally based on the values that are already there? Break it back proportionally based on the previous year, which generally are actuals. So if you've got some seasonality in your data, you can pick that up. Just break it back into equal months. And break it back using a pattern of weeks, some kind of weekly expense. Or I can even break it back using an assumption. And a good example of that, one of them is the number of business days per month. So the model will then take my total, looks like that. I haven't got that in the model. She tested that. All right, back to my 30,000 and break it back evenly and put that into the different periods. So now the adaptive planning is far more powerful when it's using formulas and drivers, as I said earlier. So a couple of rows up, you can see there's a cell here that has a little purple triangle in the corner, and that's a formula-generated number. When I click on that, you can see in the formula bar that there's some words appear there. So unlike Excel, where your formulas are unreadable, things like A3 times $C, $6, all the formulas in adaptive planning refer to row names or account names in the model, and you can probably read that this looks like it's a multiplication of the number of FTE times consumption for the telephone cost per head. If you wanted to explore what's really going on there and how we got that number, this is really handy for more complicated formulas. Click on the Cell Explorer, and we can see those two variables there displayed in the component parts. We've got 4.6 FTE, and our assumption for cell phone cost per head here is $40. I think, well, where did that 4.6 number come from? I can drill down further into the source of that. And when I click on that, it says, okay, 4.6 FTE. I'm having a look at the personnel model here. I can see we've got these 4 named people. The personnel model includes some new hires we don't know the names of yet, but they're all 0 at that month. They're starting in the future. And then there's this guy that's 0.6, so he's either a part-time employee or he's attributed 60% to this cost center. I can very easily see where my numbers are coming from, drill them back. A lot easier than Excel's trace precedents, which gives me the heebie-jeebies sometimes. So this row here, the formulas are unlocked. So as a manager, I could look at my forecast and say, well, actually in January, it's going to be really quiet and I'm not going to spend that much per head. I'm going to cut my telephone to $50 there, and what's more, I'm going to put a note on that and say start on hold. So now I've got, just like Excel, a little note associated with that. As soon as I save this sheet, this will get rolled up. So the forecast for Sales North will be combined with all the other operating units to give a roll-up at the Australia level, a roll-up for total operations, a roll-up for total company A, and a roll-up for total company. So the consolidation roll-up happens instantaneously when you save a sheet. As well as putting notes on a cell, we can put notes on a sheet. I haven't got any notes here yet, but if more than one person is working on the same sheet, and you can have multiple people working on the same sheet at the same time. I wouldn't recommend they're working on the same groups of account codes because they might overwrite somebody else's work, but there is no problem having multiple people working in a model or using the same parts of the model. I said this formula is overwritable. Up here you can see a bunch of cells with a grey background. These ones are locked down. There's a formula here that brings a value from another model, and that's absolute. The users can't change the result. They have to go to the personnel model here and change the inputs, the staff, or the cost of those staff. That's pretty much what a standard sheet looks like. You can display it in different ways. You can roll up different groups of accounts and just look at the totals. You can drill into those. You can have calculated values here. So we've got some top-down targets here. So I can see we've got a total expense target that senior management has set. And as a manager of this unit, I would want to keep my total expenses within my target. That's also showing me my variation. I'm significantly under target here, but I'm still going through the forecasting process. I haven't yet got an IT allocation. There's a lot of things not in here yet. So as I add things, I can save them and check how my total is going to the target. There's also some metrics here that are calculated from the data. So it's not just GL codes on the sheet, it's a mix of things. Now you might be interested in that the personnel part. Pretty much a large part of every business is staff cost. Despite computers and automation and robots and things, we still employ a lot of people. So I'm going to jump to the personnel model. And when I clicked on that, it's saying, you haven't saved these changes. Do you want to leave the page? And actually I do, because I tend to do the same kind of edits every time I show this model, so I'm going to leave without saving those. But it's nice to have a warning like that in your browser. Okay, so I'm running live. This is not running on my local machine. This is running off the server in the USA. And much like a web page, when you first load a page, it can take a few seconds to load. That's normal. Okay, so now I'm looking at the personnel sheet. The personnel sheet here is a different kind of model. It's what we call a model sheet. And a model sheet can have any number of rows in it. I've seen model sheets with 100,000 rows. And in Sales North, we've got one row for each current employee, and we've got a few rows here for the expected new hires. And the parameters you enter in here are linked by formulas back into the GL, and the parameters here drive the calculations that calculate the numbers that are going to the GL. So, for example, one of the parameters on here for Sales North is the location. We've got one person in New South Wales, a bunch in Queensland. And by changing this, it drives a payroll tax calculation. So the model has got assumptions for the payroll tax rate for different states. And when I set that, it will recalculate the payroll tax. If Sean Jones becomes a resident of New South Wales, I change that, it'll change the calculation for that. The key parameter here that's driving most of the things is the pay rate, and the background calculations there can break that into months based on cash accounting, the pay periods in the month. You can do it based on accruals, based on the number of working days in the month, to do a straight divide by 12. We customize this logic for every customer, and as far as possible, we have global parameters for things like superannuation rates, payroll tax, those kinds of things. And that's in a place I haven't shown you and probably don't have time to, but the assumptions, and there's some personnel assumptions here, which was another factor that would drive this model. It means that if the government changes the superannuation guarantee rate from 9.5% to something else, we just need to change it in one place and all the models update with that formula. So after you've done your budget and forecast, you'll want to view it, and I'm going to show you just quickly the reporting part. In fact, I've got a few I opened earlier. So this is my favourites page with a number of reports shown here. The simple stuff report is a expense variance report, which most accountants or finance people would be very familiar with. We've got actuals versus budget, a variation shown in dollars or percent. There's some colour coding here to show good and bad. This report is drillable in a number of ways. We can drill into the components of the groups of accounts. We can also drill back into the source. So we've got actuals, for any one of these actuals. Here I can go under health benefits, and that'll show me where in the model this number is coming from into the report. So it's very interactive. You can see at this level that it's broken down here. The $7,000 in company A, and I can further drill down into the different units in company A. And we can even load transaction level data. So when you get to an account balance in the cost center, if it's been loaded, we can drill down the individual transactions from there. The reporting is also a powerful collaboration tool, and you can see there's a bunch of notes here that different people have put on there. And one of our bigger customers has a business rule on their main forecast report that any significant variance has to be annotated. So if there's a variance more than $70 or so much percent, then the manager responsible for that has got to explain that. And if the variance is in a bad direction, he's got to say what he's going to do to bring that under control in the remainder of the year. Going back to reports, we can run reports not just on screen, but we can run them to PDF. We can also run them to an Excel front end. And I'll show you just briefly what that looks like. So we've got a monthly reporting package here where when I run that, adaptive planning is going to pull the numbers out of the system. Then I'll be running that for future months. We've actually got actuals loaded in to make the demo a bit more robust. So let's run the query on the database and say, okay, I've loaded that to Excel and here's your Excel. And I've got my monthly reporting package. So it's got the report data that's been loaded in from Adaptive, and it's got a number of pages that we've configured in Excel to look just the way that we want it, and maybe the way we're used to. So we've got a functional P&L, the balance sheet, the cash flow, some metrics, and even some charts, which are Excel charts. That's another powerful way of getting board-ready reporting out of here. There's a new product called Office Connect, which enables you to build this kind of reporting in Excel and then have it refresh directly from Adaptive through the API. So we can update those board reports without even having to log into Adaptive Planning. That's a requirement. Okay, so I'm just thinking about how we're going for time and what some of the key things you might want to see. I'm just going to check if anybody sent me any notes, and they haven't. But feel free to ask questions at any point. The last report here you can see on the left here is red, and red means it's running directly to PDF. And this is my new hire report. So it's querying all the personnel model sheets and showing me, in this case, personnel start date greater than 1st of January 2014. So now I've got a list here of who started, what their recruiting fee is, what their pay rate is. You can see we've got a few different currencies in here. Something I haven't really spoken about, but adaptive planning handles easily multiple currencies. So when we're looking at the Canadian units before, they're in Canadian dollars, manages their budgeting and forecasting in their local currency, and there's a table of conversion rates for each month that will enable us to roll up into the home currency, which in this case is Australian dollars. So if you've got a US parent, maybe you want to have the top level currency in US dollars, still do your budget and forecast in Australian dollars, and have that roll up to them in head office's home currency. Okay, I think I said earlier there are 3 types of sheets. I'm showing you a standard sheet, which looks very much like Excel type thing. A model sheet, which gets used for personnel, for assets, maybe for contracts, or anything where there's a list of items that contribute to the forecast. The other type of sheet is a cube sheet. And I'm going to go from here back to sheets and show you. The cube sheet is a multi-dimensional sheet. So I might just go back to Sales North, which is a sales unit that has got a cube sheet implemented for sales, and the dimensions there are total companies, not that much. Look at that. Dimensions there are product, customer, time, and of course the level. So if I go into my product sales, some of you might have a look at this and think that's a bit like an Excel pivot table, but it's designed also for data entry and calculation. So we can see here that there's a number of different dimensions set up here. So this is, at the moment, configured to show the time periods across the top. And down the side, we've got different product groups. And we're doing this budget for the unit sales for customer 1. And then when whoever the manager of that is finished, we might go and change that to look at customer 2 and go and forecast unit sales for customer 2. If I rearrange this, we can see that the unit sales is driving a whole lot of calculations. Unit sales multiplied by a price lookup for each item gives us the revenue. There's a cost lookup for each product as well, so it gives us the cost of goods sold. Further to that, we're calculating a whole lot of other metrics based on that. So if I change the axis here and put the accounts on this axis and the time across the top, we'll be able to see for customer 2 for all products in Sales North what that looks like in aggregate. I'm just going to display it a different way. You can see that there's only a couple of accounts that are editable and the rest are all calculated. Now just moving that around and a large sheet. We've got total unit sales, price, which is a lookup, discounts, which can't be 0 on this, and then it's calculating gross revenue, net revenue, and we've got some standard costing, variable costing, total cost of sales. All these can be calculated from the input metrics. By having this in a cube sheet, it means each of these, cost of goods sold, is reportable by customer, by product group, by customer group, if there's groups of customers, by all the dimensions in the spreadsheet, the cube sheet. And that gets very powerful when used in conjunction with Discovery, which is the dashboarding functionality within here. So before I jump to that, do you have any questions on what we're looking at there? Any questions so far? Okay. Hope you're also to give you an overview of the whole product. A number of different sheets available to different people for different purposes. Take the input, feed that into the GL. From the GL, we can create a full suite of accounts, P&L, balance sheet, and cash flow. The cash flow is often fairly simple, driven from the other 2 sheets with some parameters. And most of those things are done in the assumptions. So if I show you where the overall assumptions are held on the financial statement drivers, there will be some different drivers for the cash flow. So days payable outstanding, days sales outstanding, those kinds of things will drive the lag between revenue and cash. This is one of those here. We've got some other cash flow drivers listed here. And then some of these other financial drivers are looking at things like equity as well. P&L driver, we've got inflation, the annual inflation rate here. And drive some of them, maybe the sales forecast might be linked to that. I have that as a component. Now, I showed you the workflow post screen with the different submit, approve, reject. In addition to that, you might have some more complicated financial processes, particularly around consolidation, maybe about budget changes or approving budget changes. And there's a full process tracker module available inside adaptive planning. And within the process tracker, we can have different users of adaptive planning assign different tasks that are part of a process. We can look at a high-level view of the process. We've got 19 days to target on this process. We have all the tasks here, which ones are running late, which ones are in progress. Can you finally see if hopefully was one of the last ones. With each task, we can look at the detail. We can go and see description. We can have documents attached to the task. So if we've got a submission for a different budget, there might be a budget submission attached here. There might be a formal approval. We've just got notes inside the system. We've got a few notes from different users about where they're going with this task, and I could add a note to this chain here as well. So, as part of your financial planning procedures, there's probably a need in a lot of cases for assigning tasks to different people, and then having one page where you can see who's done what, where they're up to, and you give them a little on if they're running behind, these overdue ones, and do a demo model so they can get updated. And also see who's completed things and then what's up for approval. Okay, so this was scheduled to go for 45 minutes. I've done 40. I was really allowing 5 minutes for questions. If you're running the WebEx client and you scroll to the top of the screen, you should see a little pull down. One of the things there is chat. If anybody wants to chat, they can do that. I might also attempt to unmute participants if anybody wants to ask any questions. Otherwise, I'll give you guys an early one. All right, any questions? All right, the idea of this was to give you a high-level overview. In summary, I'm going to go back to my PowerPoint and let's go back up to our key best practices and just kind of point out where the right tool will allow these. So automating the KPIs can come through the reporting or the dashboarding. The driver-based budgeting and forecasting, heavily we're using formulas, particularly where they're linked to non-financial drivers like number of FTE or number of units sold, number of activities done, services delivered, those kinds of things. Rolling forecasts are easy in adaptive planning because you just load the next month's data and then roll everything forward. And because that's quick and easy, you're able to do that and reforecast on a monthly basis. Collaboration, I showed some of the collaboration features in there, including the process tracker, the workflow, notes on cells, on sheets, on reports. That allows everybody to have a good view of what else is going on. Also, the fact that everything automatically rolls up to top level is a form of collaboration as well. And the self-service comes partly from it being easy to use. I didn't get a chance to show you how easy it is to create a new report. But for now, just take my word for it, that's really easy. It's easy for users to drill down into the data. If we've got transaction level data, they can drill right down into the transactions without having to follow finance and say, why was my travel expenses so high last month? They can look into the actuals there. So these are the kind of things that are really hard to do in, for example, an Excel-based system. It's just a nightmare to be loading actuals every month into a set of templates and maintaining them and sending them out and giving them back and consolidating them. Where a proper system such as adaptive planning does that nicely. All right, I'd be very happy to hear from any or all of you subsequent to the meeting. I'm going to zoom back up to my slide and point out if you want to get in touch, if you've got further questions, if you'd like to hear more, if you'd like a presentation that's more specific to your organisation and your needs, please get in touch, give me a call, send me an email. I'd be really happy to hear from you. All right, and with that, I'm going to stop the recording of this, which will be available to other people, and end the webinar. Thank you so much for attending.